Ladies and gentlemen, good day and welcome to the LT Foods Q1 FY26 earnings conference call hosted by Motilal Oswal Financial Services Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Meet Jain from Motilal Oswal Financial Services Limited. Thank you and over to you, sir.
Thank you. Good afternoon, everyone, and a very warm welcome to LT Foods Limited Q1 FY26 post-results earnings call hosted by Motilal Oswal Financial Services Limited. On the call today, we have the management team being represented by Mr. Ashwini Kumar Arora, MD and CEO, Mr. Sachin Gupta, CFO, Ms. Monica Chawla Jagia, Chief Corporate Development Officer. We will begin the call with a brief thoughts from the management team. Thereafter, we will open the floor for the Q&A session. I would now like to request the management team to share their perspective on the performance of the company. Thank you, and over to you, ma'am.
Thank you, Meet. Good evening, everyone. On behalf of the management, I welcome you all to Q1 Financial Year 26 earnings conference call of LT Foods. Please note that any statement made or discussed during this call which reflects our outlook for the future or which could be construed as a forward-looking statement must be reviewed in conjunction with the risks that the company faces. A detailed disclaimer in this regard has been included in the investor presentation that has been shared on both the stock exchanges, that is NSE and BSE. The result documents are available on company's website as well as the stock exchanges. A transcript of this call will also be made available on the investor section of the company's website. So Q1 update. During Q1 Financial Year 26, LT Foods reported highest ever quarterly revenue and EBITDA of rupees 2,501 crores and rupees 302 crores respectively, grew by 20% and 17% respectively versus Q1 Financial Year 25. The growth in revenue is supported by increasing consumer demand and preference towards our brands and entry into new countries, improved supply chain and availability of our brands, and increased household penetration. The company reported a EBITDA margin of 12.1% in Q1 Financial Year 26 versus 12.4% in Q1 Financial Year 25. A minor 30 bits dip in the margin is on account of increased investments on the brand. Basmati and other specialty rice segment grew by 18% in this quarter, reinforcing the continued global love for our brands. Due to increasing consumer preference for healthier and sustainable food choices, our organic business reported a remarkable 32% growth in this quarter. The major portion of the growth has been contributed by soya meal. Normalized growth other than soya meal is around 18%. Our organic arm Nature Bio Foods launched a new facility in Rotterdam to support our global ambitions in July 25. The strategically positioned facility and Europe Gateway Port handles 15,000 metric ton annually, positioning us to capture more of the EU $45 billion organic market. In India, the household reach of Daawat has grown significantly from 45.56 lakh homes in March 2023 to 56.2 lakh homes in March 2025. This growth was possible due to our constant efforts on innovation, continuous investment on the brands, and staying relevant to evolving consumer needs and ensuring that our products are easily accessible across the globe. The snacking segment under Kari Kari has grown 40% versus last year. We have also acquired rest of 45% of the Golden Star, which we have completed in May 2025. We now proudly lead as the #1 jasmine rice brand in US. During the quarter, we reinforced asset build through the spectacular 4th Daawat World Biryani Day celebration in Jaipur and Indore. This celebration cements our position as the global torchbearer of biryani. I would like to now give an update on the geographies. The European continental currently contributes around 18% of our overall revenue. Our progress in this region has been robust, achieving a 57% year-on-year growth. Notably, we have recently secured partnerships with 4 leading UK retailers, strengthening our footprint in this market. The spurt in the revenue is majorly attributed to the UK plant being fully operational in the past quarter. North America, that accounts for 43% of our revenue and continues to be a key growth driver, with a 32% year-on-year increase. This includes the consolidation for the jasmine rice business for the quarter as well. The normalized growth of this geography is around 18%. Our flagship brand Royal holds a dominant position, commanding a 54% share in the basmati rice imports in the region. India contributes to 31% of our revenue, recording a 10% year-on-year growth. Our brands collectively hold a 25% market share, with category leadership in the western region. The Middle East and rest of the world constitutes the remaining 8% of our revenue. We remain optimistic about scaling our presence in this geography by further strengthening the consumer mindshare and market penetration. LT Foods' well-diversified geographical presence serves as an effective de-risking strategy, reducing dependency on any single market and enabling consistent performance across varying macroeconomic cycles. There's an update on the CVD side, that is reference to the CVD notice that we received by our fellow subsidiary. The company has filed a case brief on July 16, 2025, giving the past precedents wherein the AFA applied by the department was not held right by the courts of international trade. And as for the process, US DOC had some questions and clarification they could have done as per process by asking for the supplement questionnaires. Petitioners have also filed their case brief, and EcoPure has also filed a rebuttal brief on July 24 to contest the AFA. If the DOC final results maintain AFA, EcoPure can file an appeal to the Court of International Trade as well. I will just update you on the industry side as well. India is the largest producer and exporter of basmati rice, contributing approximately 90% of the global supply. The key production regions include Punjab, Haryana, Uttar Pradesh. Annual basmati rice production in India stands at 10 million metric tons, of which 6 million metric tons is exported, with the remaining consumed in India. Within India, 70% of the rice consumption is still in the form of the loose rice, and we see significant potential for the conversion from loose to branded and packaged rice, driven by evolving consumer preferences, rising awareness, and increasing demand for quality and hygiene products. Globally, the basmati rice category is growing at a steady 7 to 8% CAGR, supported by expanding demand and increasing adoption of Indian cuisine across geographies. LT, with a legacy of over 7 decades in the basmati rice industry, has successfully navigated various business cycles across both upturns and downturns, demonstrating consistent performance growth and profitability improvement. As we expect the category continues to grow, LT Foods is well positioned to capitalize with its strong brands, global distribution network, and strong supply chain on rising global and domestic demand, and further strengthen its market share and drive sustainable, profitable growth across the geographies. In line with our commitment to consumer relevance, LT Foods actively monitors market trends across geographies, deeply studies the consumer preferences, and is focused on launching innovative rice-based food solutions tailored to diverse consumer needs. With this, I hand over the call to the moderator to open the floor for question and answer, please.
Thank you, Monica.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Joyson from Amira Jashan. Please go ahead.
No, thank you for giving me the opportunity to ask some questions. So maybe firstly, can you comment on the SG&A trend this quarter, because it seems to be running higher than what is expected. And separately, could you also quantify the impact of freight cost this quarter, because this has been a consistent, I suppose, issue in the last 3 quarters. Thank you.
So yes, you are right. SG&A expenditure in this quarter as a percentage to revenue has increased. As stated by Monica, the major increase in the revenue is on the brand investments which we are making. So this quarter itself, my SG&A expenditure as a percentage to revenue increased by almost 1.2% this quarter itself. This is mainly on the brand investments.
Okay, maybe specifically, what percentage of revenue was spent on freight, and what percentage of revenue was spent on marketing-related costs this quarter? Thank you.
So my logistic cost as a percentage to revenue has reduced by 90 basis points, whereas my brand spend as a percentage to revenue has increased by 120 basis points. As a percentage
Q on Q or year on year?
I'm talking year-on-year basis.
Okay, great. Thank you so much, and congratulations for the great results. Thank you.
Thank you.
Thank you, sir. The next question is from the line of Forum from Abacus. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity. So basically, like Pakistan is experiencing a severe water crisis because of obviously the suspension of the Indus Water Treaty. So this has led to an increase in the paddy prices. So as a company, like we will be at least sitting with a year's inventory. So going forward, do we expect any inventory gain and margin improvement because of this?
So thank you. So first of all, this, whatever the impact is, as said in the earlier call also, we don't have much impact in the production of basmati rice. But having said that, but India contribute roughly to the export 80% of the total, whatever the international market we sell basmati, 80% is already contributed by India.
Okay.
Yeah.
And so Middle East also.
India is getting stronger every year in basmati category across the globe. So Pakistan has really not bigger role to play in the international market. As far as Indian basmati is concerned, this year India has exported 6 million tons, roughly 15% growth over last year. So we are very positive on the category in India as well as international market. The total market size of rice consumption is 500 million ton globally, and basmati is just roughly 12 million ton, which is roughly 2.5 to 3%. So we see good opportunity for this Indian export to grow, and as a LT Food, we have a global footprint and very strong brand and very strong distribution across the world. So we are positive on the growth and with the time improving the ROCE and all the margin metrics.
Right, sir. So again, like with the increase in the brand spends, in the medium term, do we expect a little bit again like some pressure on the margins, or can we expect an improvement in the margins going forward?
So yes, as a brand spend as a percentage to revenue, this will remain as such. But yes, we are expecting an improvement in our GP margins, which we had in this quarter as well. So we are expecting a better GP, almost better than this quarter itself in the coming quarters.
Okay, sir. And so also like Middle East has seen some degrowth of 33% year on year. If you could throw some insights on what is happening in these markets. And Saudi has contributed around 16 crores in this quarter. So what would be that in the base quarter?
So Sachin, you can add into this. So basically, Middle East include both, our branded business and private label business. So overall, what we have seen in degrowth is that, we have discontinued some part of the private label business, which was not fitting into our, the whole strategic thing. But as far as our brands are concerned, they are growing. And as mentioned in Saudi Arabia, this quarter we have done
16 crores revenue in this quarter itself. Yes, as Ashwini ji told, previously this 16 crores is wholly in our brand. Initially last year we made a private label sales that was almost 3 crores in this territory. So that has been replaced with our brand in this quarter itself.
Okay, got it, sir.
So overall, Middle East is going as per plan. So we are positive on.
Sure, sir. Thank you.
Thank you.
Thank you, ma'am. The next question is from the line of Amit Doshi from Care Portfolio Managers Private Limited. Please go ahead.
Yeah, thank you. So congratulations on a great set of numbers. First thing is our expectations of North America and our performance. Both has been quite interesting. 33% growth in a market where we are already leader, and our future expectation is also 10 to 12%. So can you share some thoughts where we are already a leader? How we expect to grow at double-digit numbers? Or was there any one-off in the 32%?
Yeah. So in USA, as Monica just mentioned, the 32% is contributed. The Golden Star acquisition has completed. But if you normalize that, then the core category has grown by 18%, on apple to apple. So we expect that the consumption will keep growing in America, and the bottom line, the pillars for the growth is, the lever for the growth is this, immigration, and being it is getting popular in restaurant also, and love for Indian cuisine. So we expect, as given we have in our forecast, we have given the double-digit growth, that we are positive on that.
Okay. So in initial earlier participant questions, the answer was that brand spend we incurred 1.2% of sales. Did I hear that correctly? I just wanted to confirm.
No. That was incremental spend of 1.2%. Incremental.
Okay, increment. So, what is, because we have also mentioned that, we are going to invest in brands. So as a sales, what are we targeting, and what we used to incur in, say, prior years? So our thought process on brand investment is what I'm trying to understand.
So in this quarter, if I tell you
so broadly, it can be quarter on quarter difference, depends on, the what kind of, the plan is. But on an average, 3 to 4% is the plan.
Correct.
3 to 4. Yeah, okay. So that answers my question. Sir, this quarter, obviously there was a huge, nice growth of volumes, and price has been stable. Going forward, what is the expectation, considering that we will have now lower inventory paddy, which was acquired last season. So when that is likely to kick in, in the sales, and do you expect a corresponding fall in the sales prices because there was a considerable fall in the paddy prices that we acquired last season?
It depends, country to country, competitive landscape, force you to, keep your margin in that range only. So, but we are more focused on growth, and we are expecting, as guidance is given, 12.5 to 13% EBITDA margin.
Adding to it, our ROCE. So we are quite confident on the ROCE part to deliver a robust ROCE of 21% plus, which we had delivered in this quarter as well. So we are constantly focusing on increasing the ROCE percentage.
Yeah. So the more focus is in delivering the ROCE. Improve.
Okay. Understood. Understood. Because in the presentation, there's one of the strategy mentioned is inorganic acquisitions as well. So, can you share your thoughts on which, I mean, you are looking at newer geographies or existing geographies, but newer products, I mean, newer brands. Anything that you can share on what is the thought process of acquisition, the ticket size that we are looking at?
The strategy is in the space of three where our business is, which is basmati and specialty rice, organic and RTH, food, you know. So in these spaces, we always look for an opportunity, and historically, whatever acquisition has been done is mostly in basmati and other specialty rice. So it has to have, you know, in this domain only. And
Okay.
of course, you know, it has to have synergic benefit also.
Okay. Okay. And last question, any update on soya meal litigation that you would want to share?
As Monica just mentioned, we have filed the rebuttal, and we are expecting October and, you know, the decision from the department.
Okay. 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 Thank you, and all the best.
Thank you.
Thank you, sir. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your question to 2 per participant. The next question is from the line of Raman from Sequent Investments. Please go ahead. Mr. Raman, your line has been unmuted. Please go ahead with your questions. As there is no response, we will move to next question. The next question is from the line of Pradyumna Chaudhary from JM Financial Family Office. Please go ahead.
Yeah, hi. Thanks for the opportunity. Just a couple of questions. First is, if you can just give some sense on what the HoReCa contribution is to our total US revenue and the same number for our Europe revenue. Like the idea is I'm trying to understand whether basmati is in these countries is more consumed in home or in HoReCa.
Yeah. So for us, you know, it's in the range of, it depends on origin to origin, but on an average, 20% roughly goes into the restaurant and food service, what we call is HoReCa. And rest is all home consumption.
So this is for US or total?
No, I'm on an average as a global consolidated average, I'm saying 20 to 25% goes for this HoReCa, and the rest is the home consumption.
And would this number for US be
if you talk about, you know, the category that where the category is being consumed, then I will say 40% HoReCa and 60% home. This is, I'm telling, on an average globally, you know.
And for the US, this 20 to 25% would be lower or higher, the HoReCa contribution for us from US?
I think 20% will be.
All right. And second question would be, what would be our normalized growth if you're just for this Golden Star acquisition? So what would be that, and why continental Europe has grown 57%? Is there some adjustment for a one-off?
So if we firstly answering your question regarding the European. So the European, as Monica stated, there has been a full functioning of the UK facility. So we have started a UK facility last year itself. So that became fully operational. And that gave me an incremental revenue of almost 80 crores in a quarter itself. So that had a one-off effect on the increase in the revenue size. As regarding if we normalize the revenue of the Golden Star and have that what is the revenue size, then it is almost a 17% growth that we have witnessed.
The normalized growth.
Normalized growth.
So, just a couple of follow-ups. One is, ideally, like even if our UK revenue has started coming in, but it's the same market we are serving, right? So, either our India revenue would have taken a hit because of that, because, not India, the continental Europe's revenue would have taken a hit because earlier we were supplying from European region. So why, like, it should not really happen, right? Because the market remains the same. So that's one. And second, if you can just give your comments on a couple of cost items. One is, how is the paddy price trending currently? One of the previous participants spoke about rising paddy prices. If you can just allude to that. And second, freight cost in this quarter was 5.7% of revenue. So earlier, in a normalized environment, we used to see 5% of revenue. So is this going to come down further, or is it now stabilized at a higher level? These are my questions.
So, answering your freight cost as a percentage to revenue, you are right. It is 5.7%. This was same in the last quarter as well, the immediate preceding quarter I'm talking about. And we expect that the logistic cost to remain as such in this quarter for the remaining part of the year as well. And as regarding the revenue sales which you stated of the European and the UK operation, we have, as Monica in the opening speech has told, we have entered into new contracts in the UK. So they have the 4 chains which we have acquired in this quarter in the previous year, but the sales was full in this quarter, which was not there in the last quarter. So that gave me the incremental revenue in this quarter of 80 crores.
And that paddy part is...
Continental Europe में कुछ hit हुआ नहीं हुआ. So continental Europe is stable, and so we have got a new growth from the new customers.
And as regarding the paddy prices, yes, the paddy prices as on in my books of accounts as on 30th June is 29 rupees. So as Ashwini told, so it is the pricing or the things that there won't be any kind of inventory gain or loss. So that have been taken care because we the inventory which we have secured, that is backed by a brand sales, so that we don't speculate in having acquired more quantity as such.
So we don't
yeah. Sorry, I was just asking, how is the current paddy pricing environment looking like? Is it?
I think the market is stable. On an average, I will say the paddy prices must be, it depends on variety, 34-35 rupees.
So that's higher than our book price, right? Our books contain 29 rupees. So there's been an increase. Is that the way to understand?
Yes. But the market doesn't behave like on the present, so all the industry player, they source in the procurement time, then they average their price and do the pricing. So it's doesn't behave like, like other commodity, and it's as Sachin said, it's a mainly branded business. The only benefit we get is when the prices go up is that, the new competition doesn't hurt you.
Yeah, in fact, I was concerned whether we'll be able to, like next year when these come into our inventory, whether we'll be able to pass on the increased paddy prices to our end customers. That's where my concern was.
So the normally prices changes when the crop changes, and the 25 prices will get an impact in the month of most probably June. So I think that's too long to forecast anything on this paddy prices up and down.
Understood. Thank you and all that.
Thank you.
Thank you, sir. The next question is from the line of Hitesh Goel from Origin Capital. Please go ahead.
Yeah, thanks for taking my question, sir. Sir, this first question on US growth of normalized growth of 18%. Is this growth also higher than your usual growth, largely because there was tariff expectations? There was a deadline that after 31st July, the tariff will go up. So in this quarter, was there a lot of pre-buying by the retailers, the distributors in US?
What is your tariff? What you said?
Tariff, this growth has...
No, I'm saying the tariff was 10%, right? But the trade negotiations are still going on. So is there expectation, maybe there is expectation of increased tariffs on agricultural products, because of which the distributors in US would have pre-bought in this quarter? Because 18% growth is very high growth, right? The usual growth is 6-7% in US geography.
We don't think that that has a bigger impact on that. This we believe that is a normal thing. It's nothing to do with this buying because of this duty impact.
So you think that this year actually US...
I would say maybe 2-3% if so, but not beyond that.
So we are expecting a double-digit growth this year in US?
That's what in the plan we have given. We are expecting roughly double-digit, which is in the range of 10%.
So that's the plan. Basically, yes, there were certain, as Ashwini told, there might be certain things, but basically this is mainly on the account of the distribution reach, and which we were able to have in the US in this quarter itself. That had a positive impact on our revenue in this.
Okay. And sir, on India business, what was the volume growth YOY? You have reported a very healthy 10% revenue growth despite paddy prices rice prices coming down, right? So if you can give us the volume growth for this year,
in this quarter itself, on YOY basis, there is a growth of almost a 13% growth on a YOY basis.
So basically there was only 3% decline in realization on a YOY basis.
Correct. So there is a 2% decline in the realization.
And sir, basically you have purchased a lot of inventory because of due to the last crop being very, you got good prices on the last crop. But now even in this season, actually rice crop is pretty good, right? So the rice prices procurement prices are going down further?
Actually, we didn't procure much. We procured it as per our plan. So we just preponed it on a season itself. So that's we did so. So generally we procure 60 to 70% in the season itself, and the remaining in the later part of the year. But being there because of the favorable rates and certain factors, we procured 75% in the season itself. So that was also within our plan itself. So that was fully backed with my brand and other things. Considering the current scenario, what we have, so considering this, it would be too early to predict the next crop, what will be there. Yes, the sowing is better, as stated by the government data, what we have. The sowing is better as compared to the last year. So the rest, it's a 3-4 months journey that will finally decide what the real harvest, what kind of crop we have.
Sir, and my final question is on gross margin. Actually, if you look at Q-on-Q basis, gross margin deteriorated by 200 basis points, despite your export mix increasing on Q-on-Q basis. So what is the reason for that? Because you are, I'm talking more from a Q-on-Q perspective. Y-o-Y, there's a 70 basis point improvement in gross margin. But if you look at Q-on-Q basis, there's a 200 basis point decline. And I thought it would be stable or declining, right? Because procurement prices have come down.
Sure. So in this, the major contributor for the decline in this gross margin is my one of my segments, the organic segment. In this organic segment, my GP margins have dropped. This is mainly because of my product mix that we sold out in the organic segment. There were certain lower GP products that were sold in this quarter itself that overall impacted my GP margins. Otherwise, in the basmati,
इसमें हमारी सोया मिल की export है, उसमें gross margin कम है. So I think the mix has affected this year.
Okay. So there is no impact on gross margin in basmati business on Q-on-Q basis. We can infer that? Okay, sir.
Organic के बाकी प्रोडक्ट में नहीं है. ये सिर्फ जो सोया मील है, क्योंकि अभी जैसे मोनिका ने भी बताया, इसमें प्रेजेंटेशन में भी है. So growth is led, जो organic की growth है, that is led by soya meal.
Great, sir. Thank you and all the best, sir.
Thank you.
Thank you, sir. The next question is from the line of Meet Jain from Motilal Oswal Financial Services. Please go ahead.
Thank you. So, can you drill down on this organic business that we have forwarded into the Europe, the B2C part, and also throw some light on the leave further acquisition that we have a call of now 21% as well. Can you throw some light on that?
तो मीत, अगर मैं आपका क्वेश्चन सही से समझा, वो आप कह रहे हो जो ऑर्गेनिक में जो अभी नया हमने ऑपरेशंस चालू करे हैं उसके बारे में. तो मीत, अभी तक जो हमारा बिजनेस है ऑर्गेनिक का, that is majorly B2B, and we supply as an ingredient to the industries. Abhi to further the effort to improve margin, abhi ye jo हमने setup करे हैं, that we will supply in a smaller pack to the supermarket. So now it will be another vertical which will be a value accretive.
Okay. So currently we have around 30% stake in Leave, and we have an option to buy for the 21%. So with the new plant of B2C, can we expect this to happen soon to leverage this segment?
So we are in process to acquire, and definitely partly, I will not say fully. Leave is more on ready to eat platform where they sell the rice cake, the lentil cake and all this. So it's a purely snacking and health. So partly it will help this plant, partly it will not.
Got it.
Yeah.
Okay. My second question is on this Middle East part. Like as you mentioned that in the Saudi, we are mostly doing branded business now. So is it like we have entirely stopped the B2B business there, or this quarter we have taken a call to focus more on branding? How is it?
अमित, अभी हमारी जो मिडिल ईस्ट की स्ट्रेटजी है वो मेनली है our own label. So we will pursue that strategy, and we are pursuing that strategy. Yeah.
Okay. Thank you so much, sir.
Thank you.
Thank you, sir. The next question is from the line of Param Vora from Trinetra Asset Managers. Please go ahead.
Hello. Thank you for taking my question. So what I wanted to ask was that despite solid numbers, the inventory days remain to 277 days, which is considerably high. So could the management elaborate any specific initiatives or strategies that are being implemented to optimize these levels and further enhance the working capital efficiency?
So inventory day तो almost same ही है, 3 दिन का फर्क है.
इसमें है ना, one of the things major in the basmati, you have to age. So aging is important. So our inventory days, if you consider from the last quarter or the March quarter, yes, the inventory has reduced, but this is normal process. क्योंकि ये नई क्रॉप आती है सितंबर में, सितंबर अक्टूबर में नई क्रॉप आ जाती है, so the inventory days gets reduced after that, and it builds up from September onwards.
Okay, so but still, don't you think that 277 days is high? Let's not compare it with the previous year, but if we look on it on absolute terms.
So normally basmati requires an aging of 6 months.
आंसर यही है कि ये प्लस माइनस ये this is a normal. You consider it normal.
Okay. Thank you.
Thank you.
Thank you, sir. The next question is from the line of Rasan, an individual investor. Please go ahead.
Hello.
Yes, sir.
Yes, sir. So I just wanted to inquire because in the last con call, which was on January, you had mentioned that we would be getting a credit from the Supreme Court as the Supreme Court had ruled in our favor, but I don't think that amount of 190 crores has been credited yet, right? Is there any guidance on when exactly you would be receiving that?
दोबारा पूछना आप जरा, सुप्रीम कोर्ट में क्या?
Insurance का claim आया।
वो तो we have got that ना, we have got that money against bank guarantee.
Okay. Last quarter.
That is there, and we have a full amount that is sitting in my books. So it is, yes, it is backed by bank guarantee. So we have taken a FDR against the same.
तो पैसा आ गया है अभी. Now it is in the High Court for the final decision. So hopefully, but the money is there.
Okay, got it, sir. Thank you. All the best.
Thank you, sir. The next question is from the line of Ishant.
I hope you have got the answer. Hello.
Yes, sir.
Hello.
Yes, sir. The next question is from the line of Ishant from Anshika Institutional Equities. Please go ahead.
Hello, am I audible?
Yes, sir. Please go ahead.
So congratulations on a good set of numbers. Could you please share the current inventory levels as of June 30th, both the paddy and rice, so broken down by volumes as well as value as well? Hello.
Yes, sir. You're audible.
Hello, am I audible?
Yes, sir.
Could you please share the current inventory levels as of June 30th for both paddy and rice in volumes and value terms?
Hello.
Yes, sir. You're audible.
Hello, am I audible?
Yes, sir.
Meet, are you there?
I'm there.
Hello. Yeah, am I audible?
Yeah. Yes, sir. Please go ahead.
Yes, you're audible.
Yeah.
That's right, huh?
Yeah. So can you please share the current inventory levels as of...
Ladies and gentlemen, the line for the management has been connected. Thank you, and over to you, ma'am.
So please continue with your questions.
Okay, sir. The next question is from the line of Ishant. Please go ahead.
Yeah, hi. Congratulations on a good set of numbers. Yeah, hi.
Thank you, Ishant.
So, could you please share the current inventory levels as of June 30 for both paddy and rice by volumes and value terms?
So the revenue, the inventory in my books of accounts is 285,000 tons of paddy at an average rate of 29 and 3 lakh tons of rice at an average rate of 51.
Okay. And So, with the monsoon progressing well, how do you see rice price trending in the second half of FY26?
ईशान आपने नाम था ना ईशान देखो अभी क्रॉप सोइंग चालू है and we are expecting good crop and the expected opening price, it depends how the crop perform, but we expect that पिछले साल से तो it will be roughly higher by 8 to 10% average.
Okay.
On an average. Yeah.
Thanks.
Thank you, sir. The next question is from the line of Vipul Kumar from Sumangal Investments. Please go ahead.
Hi, thanks for the opportunity and congrats for a very good set of numbers. So my first question is, why this RTH and RTC segment revenue has degrown, although base is very small, and at what level of annual sales this segment will break even at EBITDA level?
So yes, this year what has happened in RTH and RTC segment, there was discontinued one of the products I discontinued in this category. There was Dawat Sehat that we had launched 2 years back. So we discontinued this in the last year quarter. So it had a revenue share. So that we lost. So otherwise everything is as per the plan and as per the target set up. And yes, this segment will break even in the EBITDA category once it crosses a 350 crores mark, and which we expect in 2 to 3 years back.
So Vipul, the ready to eat and ready to cook is growing. In USA also we are done with the capacity. We are building new capacity. The plant will be operative in the next 2-3 months. So then that will start giving us a next level of growth. On this new product we have launched in India, which is biryani rice. Now we have launched Thai curry rice kit. So that we are getting promising result on that. Even on the rice cracker side, the snacking side, we are seeing good initiative. So hopefully, as to your question, in the next 2 years we will be on the break even. In USA, we are already making money on a EBITDA level. As far as RTH is concerned, it is only the India where we are investing in rice cracker and this ready to cook or ready to eat segment we are trying to build on.
Okay, and sir, my second question, why is our revenue from Middle East region is so low when the market size, as per your presentation, is so huge, 40,000 crores? So is there any culture issue or the product mix are different? So how should one look at this?
I think that's an opportunity for us, as explained earlier also, that we were focusing on the other market for the last 3 years. We have started focusing in India and Middle East. Although that's a very mature market, very high entry barrier, but we will deliver as per the guidance given in 5 years. The Saudi is also doing well, but very mature, very high entry barrier market.
So, means what are the entry barriers? Means, sir, can you elaborate, please, a little bit?
Like any consumer business, the entry barriers are the brand and the distribution. That's what the entry barriers are. And we, as per the guidance given, we have strategies to grow our business, but that will be a slow burn. Yeah.
Okay, and sir, I would drop you a mail, but I want quantity and value of all regions. I ask this in every call, and yes. So please. Yeah. Okay, sir. Thank you and all the best.
Thank you so much.
Thank you, sir. Ladies and gentlemen, to ask a question, please press star and 1 now. Participants who wish to ask questions may please press star and 1 at this time. The next question is from the line of Ketan Cheda, an retail investor. Please go ahead.
Hi. Thank you for the opportunity. My question is this 2124 crores of the revenue that we have received in Basmati and specialty segment in this quarter. Could you break that into how much is Basmati and how much is non-Basmati, please?
Can you repeat the question?
Yeah, I'm saying 2124 crores of revenue that we have clocked in this quarter in Basmati and specialty rice category. How much is Basmati and how much is non-Basmati?
Okay. First of all, so let me tell you what specialty rice is. One is Basmati, other is Jasmine. And that's the mainly two varieties.
And 85% of my overall revenue, 85% revenue comes from the category. And yes, there is certain regional rices that we sell in the India and as well as the exports. So overall revenue size in the Basmati, in this Basmati and specialty category, 85% is Basmati, 15% is the others.
Okay, so 85%.
Yeah.
Sorry to interrupt. 85% of 2124 number, right?
Yes.
Okay. Yes, sir. Please go ahead, sir. You are saying something.
I'm saying, mainly Basmati, followed by Jasmine, and followed by the Indian regional rice.
Right. And one more clarification. So, whatever Basmati we sell, everything is sourced from India, or do we source it from some other geographies as well, outside India? Specifically for Basmati.
Mainly India, sometime, from Pakistan. But this is mainly India.
Okay.
Our EU operations, they source from Pakistan, but it depends on year to year. But this year is only less than 10%.
Sure. Thank you for that. And the other question I have is in terms of the future growth plans that we have shared in the presentation. I see that you mentioned the EBITDA will grow at a CAGR of 16%, whereas the PAT will grow at a CAGR of 21%. So could you help me understand what will change between EBITDA and PAT that will help us grow a PAT faster than the EBITDA?
So yes, it is normal. Whatever the EBITDA grows, the PAT normally grows at a faster pace. If considering any kind of industry, anyone. So yes, there are the interest and the depreciation component, which doesn't grow in the same proportion as the growth in the EBITDA percentage. So our PAT, what we are expecting is a growth, greater growth than what we are expecting in the EBITDA. But more to add to it, we are focusing more on the ROCE, that we project to have a 23% plus in going forward years. So from a 21 levels, we expect this to grow to a 23 plus level.
Okay. Thank you so much. Those are my questions. Wish you all the best.
Thank you.
Thank you, sir. The next question is from the line of Pradyumna Chaudhary from JM Financial Family Office. Please go ahead.
Yeah, hi. Just a couple of follow-ups. One is, you said that the consolidated normalized growth adjusting for the Golden Star acquisition was 17%. But if I just look at your numbers, I think Golden Star in this quarter would have been around 300 crores, right?
Correct. But as Monica stated, it got consolidated in 31st May. So after that, the revenue was getting consolidated. So before it,
Okay.
the revenue was yet. Yes, that's
1 month.
only 1 month sales was there.
Understood. And second, I'm still not able to wrap my head around this Europe 57% growth, right? Because Europe would be what almost it must be around 450 crores quarterly revenue rate. And even if 60 crores has come from UK facility, even then that 57% adjusting for the 60 crores also looks like a very high number.
So yes, in this, the European sales in this quarter, if you include the Europe, the UK as well, that was 376 crores in the rice and the specialty segment. Last year it was 239 crores. The incremental UK sales this year contributed almost 80 crores. So if we normalize that also, there is a 24% revenue growth that came in the European operations this year.
And what's driving this growth?
So both, it's a mix of Daawat, which is growing. Second, we have done little bit, the B2B sales. And third is, we call it, the label we pack for the stores. So all three level, growth has been led.
All right. But it's not coming more from a private label, right? It's coming usually from branded. The growth.
All three revenue driver, brand, the kind of B2B sale, and which we do private label for the stores. So तीनों में, partly this growth is driven by.
Understood. And why another question was on the organic side. Why was Daawat Sehat discontinued?
It is not on organic side, so it was under the value added thing. So we launched fortified rice in India, which has not much appreciated by the consumer, not got response, so we discontinued.
All right, because it seems like it was contributing quite significantly to your segment event.
Yeah, so we pushed it very strongly. We invested money. We put in our whole distribution, but it has not worked as per our expectation.
Understood. Thank you, and all the best.
Thank you, sir. This was the last question for the day. I now hand the conference over to the Monica ma'am for closing comments.
Thank you. On behalf of the management of LT Foods, thank you all for joining us on our earnings conference call today. We hope we have been able to address majority of your queries. The nature of our business and the operating segments and the geographic market don't generate highly dynamic quarter variations, so making semi-annual reporting cycle more aligned with our operational rhythm and better position to deliver the meaningful, comprehensive insight to our investors. So thus, starting from Q2 financial year 26, we will conduct our earnings call semi-annually. In the meanwhile, you may reach out to me or our investor relation partner EY for any further queries that you may have, and they would connect with you offline. We now close the call. Thank you all.
Thank you.
Thank you. On behalf of Motilal Oswal Financial Services Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
If you found this video helpful, please like, share and subscribe for latest upcoming videos.